Alright, YouTube is your favorite guru from Timo. And I don't know why I did that. Like, I don't know what that was. But we're going to be talking about my trading strategy that I almost use every day. I'm not going to be like them niggas that lie and say I use it every day and then 2 weeks later I got another strategy. But this is something that you can add to your trading bag, right? And I usually trade this for continuations and stuff like this. And what this is good for is finding levels. You can catch your levels with these, have one really good level, and you will have a minimum, like probably like you got risk like 15 to 20 points at max. Even you can probably even smaller. You can probably have an even smaller stop loss if you trade this correctly. So make sure y'all boys pay attention. This is to help y'all. You feel me? I'm not selling y'all anything. You feel everything. If you wanna keep in touch with me on the TikTok, Instagram, all that stuff is in the bio. But let's get into this strategy, right? All right, boom. So this is it right here, right? Or we're going to show you a live representation inside right here, okay? In the charts today, we took this, right? So what you have to understand is these little bell curves things drawn out, right? These little weird looking U things or D looking things. These are called bell curves. Now, how are bell curves and what are they? Why are they important? So what bell curves look like in the actual market is chop. It's range right here, right? Boom, bam, boom, bam, boom, bam. This will be a bell curve. So if you seen the market chopping on the actual volume profile, which we're going to be using today, it'll look something like this, right? That's a terrible bell curve, but it'll look something like this, right? And I'll show y'all down here. So if we get the anchored or the fixed range volume profile tool and we draw it out like this, where we're chopping right here, as y'all can see, we got this nice, let's zoom in, we got this nice smooth bell curve, right? I couldn't think right there, my bad. We got this little area where we smoothed out, we get less volume in, and then we got this area where we get a lot of volume in, right? And if we look over here, you can see that, well, I think this is like on the 15-minute. Oh no, this is previous day high. But yeah, and this was the previous volume profile. But as you can see, even over here, we got the same thing. This is an even better one. You see we're chopping in this area, and we got this bell curve, right? And I ended up drawing out this previous level. And as you can see, this level to the freaking tick, if you wanted to, which I wouldn't recommend, but if you wanted to, you could have came down and put a limit order right there, and this would have ran straight to your TP. And that's what we're going to be talking about. I'm going to be showing y'all how you can find these levels on y'all chart. So y'all probably already like, oh, this is going to be good. Nigga, you better be like, this is good, my nigga. You feel me? I'm giving y'all stuff for free. You feel me? But let's get back into it, though. Let's delete these drawings because I do have a lot. But yeah. So going back into it, bell curves, right? Looking at that. Like I said, bell curves are ranges, right? We're moving in ranges, right? So market moves, we go up, boom, range, boom, go up, range. You know what I'm saying? The market tends to move something like this, right? And the reason it moves like this is because we travel to previous day balances. Not previous day balances, but previous balances, right? And that is perfect. Now that you understand, we go to where the market most likely consolidated it or it spent its most time at. You just have to figure out what level you need to be looking for, right? And most of the time, it's going to go to the overnight level, right? And I'm going to show y'all what I mean. So we all know we got Asia. We're going to have no, it's not. Yeah, Asia session, London session, and New York session, right? And my bad if I'm going kind of fast. But yeah, if I did mess something up, type in the comments and I'll go over it again. But we got Asia session and London session and New York session, right? So we all know we usually during Asia session, we usually like chop a little bit. And we then probably trend up and still choppy. And then London session, we either continue this or we reverse, you know, come back down, sweep this area, come back up. That's an ugly, what's the name? And then boom. And now we got New York session, right? Now, during New York's, now, my bad, I skipped something. Now, what this is called is overnight inventory, right? During the overnight session, this is what we did, right? We climbed up. We seem to be in the uptrend. This wonky drawing is terrible, but we climbed up. You get what I'm saying, and continued up to the upside. So, what are we going to be looking for New York session? I'm going to be looking for buys mainly because during Asia and London session, we just continued upwards, right? So if I know my bias is bullish, where could I enter, right? What could be a place for me to enter, right? So let's say we are all the way up here currently, right? Or yeah, so that'd be cool. So what I'm going to be doing, what I would do is get my fixed range profile tool, which I use Motive Wave, but this is for y'all that use TradingView, and then drag from Asia session to London session, and boom, whatever range I get right here, or whatever with the bell curve, whatever little thing I get. If so, we know we got the most volume right here. I'm going to be looking for us to retrace back to this level. So this volume profile thing, it looks some probably like this, and then smoothed out like that. That's probably what this will look like. And we have our value high, mean low, and then value area high right there, right? So, oh, what the freak? I just posted a YouTube link. Somebody just got a free promotion. I don't know who did, but so yeah. Now, this would be my overnight inventory, right? So what I'm expecting is for us to either come back down into this range, you feel me, and push back up to these highs. We can use this. More than likely, what we usually do, we want to see us either tap onto this high, or for a deep retracement, come down into this low, right? And we can then push up right there. And that's how we'll use the overnight inventory. Or you can see sometimes we might come all the way down to the volume profile, the value area low, and then push up like that. Or like today, we can boom, we can have something like this, right? Where we did, this is exactly what we did today, where we just push through this area, and then we fall all the way through this volume, come back, get accepted back into it, reject off of the volume profile, the value area high, and then press down lower, right? Now, this is just a terrible illustration of what can happen, but I'm going to be showing y'all more in depth in the actual charts, because I know y'all probably are very confused on what I mean by all of this, right? So, going to today. Now, I got this indicator that lets me know all of the different sessions. So this red box is Asia, and this purple box is London. If you want it, it is Market Profile by Joshua. Shout out Joshua, right? So what I typically do is get this fixed range volume profile tool. I click it from Asia session, drag it to London session, and boom, I get my value area highs and lows, right? Now, this whole entire area is what I'm going to be looking for the most. Like, we're going to be drawn to this area, and I'm going to be either looking for rejection, acceptance. That's the only two, rejection or acceptance. And what that means is I'm going to be looking for us to either bounce off of it and continue up because we're in the uptrend, or I'm going to be looking for us to push through it, or us get accepted into it, and then with the point of control, then getting rejected out of it and pushing up higher. Some simple like that. And today, we ended up pushing through it and used this value area high as another push through and then continuation down, right? So, and it's very simple. Let me give y'all my settings, right? Because this is not even that hard of a strategy. It's super duper simple. So this is the style I got. My value area highs and value area high and low are white. These boxes are checked, and then my point of control is black, right? And then this is the input. Make sure you got it on ticks per row. Make sure the row size is at 1, and you can have this at 70. Sometimes I have it on 40, like on my what's that thing called? Like on my Motive Wave. I have it on 40 because it's I trade with the actual volume charts instead of the candlestick charts. Instead of price, I trade with actual volume, so it's a little bit different on there. But Yeah, so I trade with this, but these are the settings. Make sure you got them on like these. Now, once you get these, all of these level, all of these levels right here. So this whole range right here, which you can mark out if you want to. This whole box, this can become a demand zone, support zone, whatever you would like it to be. This whole entire area can become a demand zone, support zone, whatever you want to be. And like I showed you earlier in the other example, this bell curve over here was perfect, right? Where we just range. Oh snap, this is not what I meant to do. This over here was perfect, and boom. This can become, now this is a level as well. And as y'all seen, I marked out the point of control for this level over here. Point of control right there, and we came right down and tapped it twice and pushed up off of it, right? Only reason I marked it out is because we used it again over here, bounced off of it and pushed up. Now, how you figure out if these areas are very, like, how do you know if a level is really good is if we have bounced off of it multiple times, right? So I knew this high was good, or this value area high right here. That's why I got it marked out for another trading session, because we bounced off of it multiple times. We used this area for buys, pushed up. We used it for sales right here. We used it for sales right here, which was actually a good trade as well. And right here, we used it for buys. We held it pretty well. So I knew this area right here is going to be a good area where I can look for buys again. Like when the trading session opens up, I can use this area for buys. Stop loss somewhere like that, and I can aim for these highs up here, or I can even aim for these highs, right? And with these areas, right, since you know where you can be looking for, since you know the levels, if you look each level, that every time we bounce out of this box right here, we push up, right? You could have had, once we swept this level, once we came back and we got accepted in here, but we hit the point of control inside of this range and rejected out of it, and then proceeded to push up higher. This is finna sound crazy. Let me slow it down, right? So boom, let me break this buy trade right here down, right? So how you can use these balances, right? Because this is a balance over here, and I'm not gonna keep drawing this out. So let's just draw it out like this. This is a balance. This is a balance, right? So this is our point of control, stuff like that, right? So all right, so now that we know this area over here is a previous balance where we chopped it and we had difficulty breaking out of, and we see that we come down into it. Once we come down into it, we come to the point of control and we reject off of it, right? Where are we going next? To the next set of balance, right? And that's what we do right here. This is where balance at again. Remember, this is where our overnight session was for last night. So what do we want to see now? We want to see either we go back down or get rejected out of it again and try to push through this balance, seeking more balance down here, or we're going to use this area to continue upwards, right? We're going to continue upwards, bouncing off this value area low over here and pushing up. And that's exactly what we did, right? And so the reason I brought that up is because once you know what levels you should be looking to break out of, or to look for to be rejected off of after you got a clear sign of buys or sales, you can have you a very tight stop loss. Like right here, for example, this is the very point of this point of control, right? Not point of control, but that value area low. Well, this is it right here. But this is the very point of this value control, and you can have you a 15-point stop, which I usually trade anyway. 15 points, which would be 30.25. So you can have you a 15-point stop, and then you can have you a 60 point, or even I usually go for 80 points too if I want 1,500 off of one contract. So you can have you a 80-point take profit. That'll be to this very tick right here, and you get you a 5% RR. You know what I'm saying? All you had to do was wait for you to get accepted back into here. You get you clear signs of buys with this candlestick right here, engulfing all of these over here. This bearish price action over here. We get this breaker structure right here. Now we can just wait to see if we get rejected, or we reject these lows down here, or we not reject them. We accept these lows down here, or reject out of them and push through, right? So now we just waiting to see. Okay, now we want to see either boom, come back in. We want to, once we get this buy right here, we want to see if we come straight through and come back and use it for resistance, or do what we did today and break out of this area. I mean, accept this area and push upwards, right? Like that. You know what I'm saying? Something simple like that. And that's the overnight inventory, right? That's how you trade it. Now let's go back over again because it's a little confusing, I know, which is the main simple thing, which the my bad. How you keep it simplified, right? You get your fixed range profile tool, drag it from Asia lows to London lows, boom, bam, mark out this box. If we get a retracement back into this box, watch what we do inside of this range. That's simple. That's the simplest thing you want to see. You want to see you can trade breakouts. You could have traded a breakout right here, which I wanted to catch the breakout trade, but I want to see us come back into it, right? Want to see that come back, bring back down, and then push back up. We can trade breakouts. We could trade rejections right here. We rejected off of this high multiple times. We could not break through it, so you could have caught sales up here. Could have caught sales right here. Go for the same amount of points, which could have went for that, something like that. Especially since we're pretty bearish for today anyway. Would have ran straight through. It's a lot of things that you can do once you come back into this range, and this is the main thing you want to look for. This is what I usually look for. If it doesn't pull back into this area or something like that, typically I have more levels set out. But if we're at all-time highs, more than likely the only way we're going to continue upwards is if we come back down into this range and then push back up, right? That's the only way we're going to continue upwards, if we use this area range over here. That's it. That's the only way. So you will be seeing this pull back down into it a lot. So yeah, this is a strategy. Like I said, I don't want to have this video too long. You feel me? I'm not going to edit it or nothing like that. I hope this one made sense. I hope it's not as hard, because I feel like it's a little more advanced for people, especially new beginners and stuff like that. But once you do get the hang of it, it's super easy and very useful. God loves y'all boys, though. Catch y'all in another video. Peace out.